Anyways, what matters is we have a zillion things to get through today. And thematically, we're going to start with some insane moments in the public markets to kind of give context to what we're going to talk about later on. The biggest data point that came out was Apple reaching $2 trillion in market cap. And if you weren't on Twitter when this happened, it was kind of interesting because CNBC said 2 trillion and Yahoo Finance did. And it's kind of, everyone's kind of getting there at different times. But Apple, 2 trillion, it finally happened. Impressions, Danny? Were you surprised? About time? How did this land with you?
I mean, I think it's really a legitimate question whether Apple should join the United Nations. Last year they had more than 200 billion in GDP, if you will. And that puts them roughly in line with New Zealand. I mean, New Zealand, according to the website I'm looking at, has a 205 billion GDP. And I think if New Zealand has representation, I don't see why Apple should not.
So many thoughts about that. One, revenue and GDP are different. One is citizenry versus corporate, like you work for a corporation. I don't agree that it should join the UN. I do like those analogies for comparative purposes, Natasha. Like it helps give scale. Like it shows you how big one thing is next to the other, but I wouldn't say it's going to join the UN because can you imagine Tim Cook just hanging out with all like the weird people at the UN?
You can't imagine
right.
that.
He would his speaking presence. It just gives me UN vibes.
Really?
Only.
Oh gosh, I'm the outlier here apparently. There were other records though. The S&P hit a record closing since February. We have erased the entire pandemic dip for the kind of broader stock market after the Nasdaq did that. Though, as we've all seen, the S&P is now 5 tech stocks and friends, the same 5 companies that you can kind of name. And there was this stat in the Times that I didn't really get. It said that 5 companies now constitute 20% of the stock market's total worth.
Whew.
Which stock market? Like how are they measuring that? It's a weird stat, but I think it goes to show.
A stat that I did like, I think that you put together, was that around 3 years ago, the big 5, Alphabet, Amazon, Microsoft, Apple, and Facebook, were worth 3 trillion together. And now just Apple and Microsoft are 3.6 trillion. And to me, that was just like a really good way to frame it. Maybe better than the UN way, actually. I'll give you that. Because I thought that was, as the sheer size is insane. And of course it happened in 2020. Of course it's part of this market rebound story. I feel like things are just like trekking along and everything is just this huge like uphill story now.
Well, I think part of the answer here, we've talked about valuation multiples increasing for startups, but the same thing is true for tech companies as well. I mean, I'm looking at Apple, which by no means is not is a new startup, a company founded in the 1970s. It's hitting almost 50 years, but like it's multiple expansion. I mean, from a year ago, going from somewhere between 16, 18 PE ratio to 35 right now. Right, alone just on the multiple expansion of what we value Apple as its revenue has doubled in just the last year, which to my mind sounds incredible because, again, mature company, quite a challenging landscape for growth for Apple. I guess they can go into cars, maybe they buy Tesla. I guess they can go into services, although with the App Store under attack by Epic Games and a bunch of other companies, Facebook, it just seems to me like it's not to say that there's no more revenue to be grown, but like to double the PE ratio in a year in the middle of a coronavirus pandemic in a time when more and more people presumably aren't going to upgrade their mobile devices. I'm not, and I always get the new device, but I don't use my phone anymore. I'm just very confused at how you make the math work on a lot of this stuff.
Is that why you never answer my texts? Because that would explain a lot. On the Tesla point, I have been working with Kirsten from the TechCrunch team covering the Tesla share price appreciation that is, I think, driven a lot of the SPAC noise that we're hearing about because Tesla rose, then Nikola, the car company, SPAC'd, and then SPACs got hot because Nikola did well, kind of counter narrative how SPACs have done traditionally. Tesla is just going up every day. Like it's this weird moment. It feels like Yahoo stock in the 90s. Like you just pull up the stock, you look at it, oh, it's at 4% today, whatever. At some point, this has to stop. But I'm curious, what could be a confounding factor to the enthusiasm that seems to be imbuing, Apple stock, Tesla stock, so many tech and tech-ish companies. It feels like Bitcoin in late 2017. It's going to turn around at some point, but you don't really know when, and so you just feel dumb until it finally happens. Because if you're sitting on the sidelines like we are, you feel like you're missing out. It's FOMO.
Well, and blockchain hit a new, or I shouldn't say blockchain, but Bitcoin hit a new recent record this week as well. So it's interesting to see that it's all cross-correlated. It's not that money is flowing out of one asset and going into alternatives or vice versa. Like everything is rising equally at the same time. And, on Tesla, I think the question is, we've seen another couple of electrical EV vehicle mandates come out in the last couple of weeks. And I think one of the big questions is, unlike Apple, where I do think there's some like TAM concern, like they own the market that exists. Everyone who has a mobile phone kind of has a mobile phone, the top 2 billion. In Tesla's case, like that market is absolutely massively open in a way that like it's not in the mobile phone industry. So, we always get into this bear conversation. Like I still remain somewhat bullish. I don't know if I would buy at this price,
Yeah,
but
sure.
I would like to actually see it, realize itself a little bit more. But I do think that there is a legitimate TAM conversation to be had with some of these companies.
Yeah, yeah. Final note before we talk about some IPOs to kind of bring this closer to home. But like, I was talking to Jason Lemkin on Twitter. Jason's a friend of the show. He was the first guest ever on Equity. He actually helped us launch the show by being really promotional for us. So shout out to Jason. He was like, we were talking about Tesla, and I'm like, it's so overpriced. At 420, it was expensive, and he was like, what? That was like a year ago. And Tesla's gotten smaller in terms of revenue than it was a year ago. And a bunch of the revenue that's you're talking about there is actually from regulatory credit sales. So the company has gotten smaller, if I recall my math correctly. And it's worth like 800% as much. And that to me is the thing that I can't square, no matter how much we talk about TAM or Elon Musk's hair or whatever. It just doesn't make any goddamn sense.
Well, I think Natasha and I were talking about this last night in a call. I think there's just less and less fundamentals analysis going on in the tech industry. It doesn't matter if it's early stage startups, late stage startups, publicly traded companies. Like there is some modeling with SaaS companies, but outside of that, I think it's just enthusiasm. It's hype. Natasha, you were just doing yesterday a call on D2C brands. And I mean, one of the crazy things with D2C brands is how much it's just about hype and the influencers around it. There's no actual product. There's no, in some cases, gross margin. It blows my mind. And I think this is a great example. It's like revenues are down, therefore it's worth more.